Hello traders and welcome to Chris FX. In this video I'm gonna show you the simplest and most effective FVG trading strategy that you can use. Now, because I want to show you my appreciation for your unlimited support, what I'm gonna be doing on every single Friday starting from this video right here, I'm gonna be giving away $10 for free to the first one of you viewers who is gonna find the cryptogram. What is the cryptogram? There will be a code which is gonna be presented at random points inside the video, and there's gonna be a sound playing as well. Now, those of you who will watch the whole video, you will have the chance to find the code first, and I want you all to type it down in the comment section. But it shouldn't discourage you if somebody has typed it first, because he or she might have it wrong. So go ahead, watch the whole video. You will be able to identify the code only if you watch the whole video. I will break it inside the video. It is like a game and you win money by doing that. It is for me to give back to the community as an appreciation for your unlimited support, guys. So let's now go ahead and begin with our video. And for this strategy that I'm gonna teach you guys, we are gonna be using Nasdaq. Okay, Nasdaq specifically. Now, this strategy is very simple and it is taking place on the 15-minute time frame. And when I say the 15-minute time frame, only the 15-minute time frame. The strategy is very simple. I'm gonna draw it first and then I'm gonna show you two examples. I'm gonna draw it on a bearish example and on a bullish example as well. So one example is that, and this is gonna be the bullish entry. And then I'm gonna show you the other example on the right, which is gonna be the bearish entry. Simple as that, guys. Now, you won't need to watch for any specific time inside the day. You don't care when this thing is gonna happen. We have a move. Let's assume that we have a move. Usually it is a strong move when we are referring to Nasdaq and S&P 500. In this occasion, the first example, which I'm gonna be separating with a vertical line, we have this down move right here. So what I want you to do, I will draw it above and then I'm gonna tell you. I want you on the 15-minute time frame to identify a fair value gap. This is a fair value gap, okay, right here. Actually, the highest fair value gap of the most recent leg, and this is your highest fair value gap. This leg, it doesn't matter, it might have multiple fair value gaps, you don't care about that. When you suspect that this move might be the move that is gonna reverse, of course you don't know that, you will be doing the following. It is as the other strategy that I showed you with the 1-minute entry from the inversion FVG. You suspect that this upper fair value gap, let's draw it here now, this upper fair value gap, and of course you suspect the same thing maybe over here and the same thing over here. Of course you can have your bias as well. I'm gonna show you real examples. Now we have the highest fair value gap here, and then let's assume that we have another fair value gap, excuse me guys, right there. What you will be doing, and I'm gonna draw it actually, I'm gonna draw the fair value gaps. Here is one fair value gap. Let's suppose that here is another fair value gap, and those fair value gaps, as price is coming back, this first fair value gap is not being respected. There is a huge body, let's say, breaking above it. Now, you will be waiting to see how price will react from this fair value gap right here. And as you see, it needs a little bit of discretion, let's say, this strategy. As you see, the candlestick, the 15-minute candlestick, you are not scaling down on a lower time frame, being printed. Let's say now this is happening. Let's say, let's draw it. This is your bullish 15-minute candlestick and it's being printed. It is wicking a little bit. It is leaving a wick above, and then it starts breaking. You enter instantly or with a buy stop. What is a buy stop order? It is an order that you place and you say, I want you to buy if price breaks above this area. and this area is gonna be the top of this previous area, and the stop loss right below this one. Now it is a prerequisite that there will be a fair value gap. If there is no fair value gap, you are not doing that. So now you are checking out what is happening right here. This is being printed. You can either, when price comes here, buy with market execution and the stop loss right below the area, or if you suspect that this will happen, you place a buy stop order exactly right here, and when price does that, it activates you into the trade. Okay, and then you let the trade play out, and more likely than not, you're gonna be winning the trade. This is our bullish example. The bearish example is, of course, the exact opposite. Let's assume that we have this leg right here, this last leg, and of course, as I said, you can watch for areas of the past. You might suspect that there will be, let's say, a reversal from somewhere here, and let's make it a little bit smaller, okay, like that, and let's assume that here you have now even 3 fair value gaps. We don't care at all, guys. Actually, let's take this one. 1 fair value gap, 2 fair value gaps, 3 fair value gaps, let's say, and price starts to retrace right back. In this occasion, you are not scaling on a lower time frame in order to look for a continuation. As I said, rather what you are doing, you are willing to go the opposite way, but you want to see a violation of the last fair value gap. Now, let's assume that this candlestick is being printed, and I'm not gonna print the wicks, I'm just gonna do that. Let's assume that I will just use the body right here. Of course, there will be wicks. This is being printed, this stops, let's say, somewhere right here. Let's draw a very small wick, this one right here, okay? This is your first candlestick. You already suspect that this might happen, this might be broken. The second candlestick is being printed, so now what you can do is either place a sell stop, which means you are telling the market that if I go below this area right here, then I want you to activate me into the trade. And of course, we're gonna talk about the targets, guys. We are gonna talk about the targets. Or you are saying that I'm not gonna place a sell stop order, I wanna be in front of the chart and look at it as it happens, and then enter right here with a break. Okay, with a tap, with a market execution, with this violation of the last fair value gap, I shall say, I am entering with the market execution, and the stop loss again is above this high, and take profits we're gonna be talking about. Now guys, those are the accounts that you see on your screen that I passed with my hyper scalping strategy on futures, which gives a spectacular winning percentage of 70 to 80% out of hundreds of trades. We are taking maybe 50 or even 100 trades per day, believe it or not, and I have the largest winning percentage in the market. You don't want to be missing out. This strategy is golden. If you want to learn more about it, go ahead and enroll in any of my services. Of course, you can also enroll in the signals, for which you don't want to miss the 30% discount that I have with code signals30. So go ahead and place your code and purchase by far the best signals service ever for a lifetime, and I'm going live for 4 to 5 hours every single day. Let's move on now to the chart and let's show some examples. With my first example being this one that I showed you on the thumbnail. This exact example right here. It is the one that you have seen on the thumbnail. Now, of course, when we are talking about this strategy, you will not go ahead and identify this one as your fair value gap, guys. Okay, this whole huge area right here, this you will not do. You want to have a normal area. Secondly, you will be able, as I told you, to say where am I generally speaking at price action, where am I in the whole, let's say, spectrum of things. If you see, for example, that you are in a bullish movement, then you can suspect that this will be a continuation towards the upside. So you could be looking, let's say, for buys only in this occasion, down here I mean, and if you are up here, you can be looking for potential reversals of those legs in order to continue towards the upside. Now, things are very simple. On any single leg that is being printed right here, you say, do I have a fair value gap here? Yes, I do. I have this fair value gap. Okay, and let me go down to the 15-minute time frame actually. Here I am on the 15-minute time frame, and I have this fair value gap all the way to the top. Very good. Now, as you see this candlestick being printed, you can say, as I told you, this is the highest fair value gap that gets violated. We tested this order block down here as an extra confirmation. This order block has been tested, and now the only FVG that I have of the 15-minute is this top FVG. Once it is getting violated with this strong body, you can go ahead and say, I want to enter my trade exactly at the top of those bodies right here. Okay, with a stop loss all the way down. It might be a very large stop loss, but this is the strategy, or in this occasion you can enter exactly right here. I would suggest instantly, not even at the full breakout, at the breakout of the bodies. So this would be your trade. Now, regarding targets, of course we need at least a 1.5 to 1 RR. And 1.5 to 1 would be fantastic, but you can go ahead and do it a 2 to 1 or another point of liquidity. Okay, I want you to target no more than 1.5 or 2 to 1. There you go. This would be your 2 to 1 win. And as I said, I want you to hold those trades, guys. I want you to hold those trades for at least a 1.5 to 1 reward to risk. Now we will check it out together and we will see if this thing plays out again and again and again. If I take this movement, I will take you step by step, and guess what? We are gonna be doing a backtesting also in the other channel, the SMC Trader, very soon on this strategy. For the moment, I hope that you are watching the whole video, learning and finding the cryptogram, the quote, and then you can type it down in the comment section. The first one who is gonna find it correctly, he's gonna win $10. I'm gonna email the first one, I'm gonna respond to the winning comment, and when he or she responds to me, I'm gonna go ahead and send him or her the $10. We continue with the video, guys. Now, here you might tell me, Chris, here you would be losing with this breakout, let's say over here, you would be going short, and I will tell you, no, I wouldn't be going short there. Why? Because there is no fair value gap over here. On the other hand though, after this grab of liquidity of those equal highs, I do have a fair value gap, which is this one. This is my last fair value gap right here. It doesn't matter if your fair value gap is large or small. This is why I told you, when you see the momentum, go with the sell stop. In this occasion, you don't need to have, let's say, a stop loss which is that high, but you can do it, of course. You can do it a smaller one, but you can do that, of course. So your trade here would go at the bottom of those bodies right here, and you can target again a 1.5 to 1 reward to risk. I think is the best thing to do. If you would go for a 2 to 1, yes, you would have hit the 2 to 1 RR as well. Okay, so you would have hit the 2 to 1 RR. Let's go ahead and show more examples. I'm gonna show you even more examples, and you will see that this works like a charm. Here, would you be taking any trades over here after this breakout? No, because there is no fair value gap right here to be broken. Very nice. So we saved ourselves a trade. Here, we violate this last FVG. Does this mean that after this reversal, you would be going short after this breakout? Of course not, guys. Why? Because this is absolutely enormous as a stop loss. What would you expect here? Okay, never this one. But here, you would be going long in this occasion. Here. enter this breakout. Let's play it actually step by step. Okay, let's check it out. Okay, here, let's be very honest right here, because of the violation of this fair value gap, because you wouldn't know at the point of this violation, you would be having your buy stop over here with the stop loss right below the area. Yeah, and this means I think that you would have lost. Here, at the point of re-entry, if you would have re-entered with the very same strategy, let's see for how long this would be going. Let's go ahead together and check out for how long this would be going. Not very well, as you see, this wouldn't be the best example. So, in 1.5, not even, you wouldn't be able to hit your 1.5 to 1 RR, and the stop loss, let's say, should be over here. Let me show you a thing that you can do, because when this breaks, price rarely is coming back. One thing that we can do with this one, as a rule, is not to place the stop loss all the way down, but to place the stop loss below the low of the candlestick, you see, below the low of the first candlestick, of the second, candlestick, which is responsible for this, the creation of this fair value gap right here, okay? So if you do that, then you would be winning way more trades and you can safely go for your 2 to 1s. Here, the candlestick would be this one. And you can say, I will go for the body, not even the wick. So here would be the stop loss here in this occasion, and those trades eventually turn into more than a 3 to 1. But let's suppose that you are going for a 2 to 1 RR, 2 to 1 even right here, and right here, if you would do the exact same thing with a stop loss right below the second, candlestick we said that created the FVG, then you would be hitting, even here, you would be hitting your 2 to 1 RR. So there are things that you can do, because price, most likely than not, when it breaks impulsively from these areas, it is not coming back. Now let's show some more examples. You see how I'm building the strategy, this free strategy here with you. And if you want to get funded, as I'm doing on a regular basis every single week, actually, you can go ahead and follow my signals or the mentoring or the academy. I do suggest the lifetime, of course, and you will find all about my spectacular strategies and of course the hyper scalping strategy on futures, which is not there in the market. I am the owner of the strategy. I invented the strategy. Nobody else has invented the strategy. Whoever else comes up and shows the strategy, he or she are coming second, and I have video proof for that, okay? But nobody else is gonna go ahead and give you the strategy from my members, because they're not silly, they're all smart people, and they know that if we start giving away the strategy, then it will stop working. So if you want to go ahead and learn the strategy now that there is time, go ahead and enroll. Let's go ahead, and hopefully you are doing great with the cryptograph as well, with the cryptogram, Here, the very same thing. Of course, you could say that this is now my FVG of the last leg. Okay, of course, this last leg did not break above this previous leg. So you can say it is either this one or it is this one. I would prefer that we would say that this is my leg, okay, my last FVG. And this is the point where I will place my sell stop order. What did we say? We said that we can place the stop loss right above the second candlestick that created this FVG, okay, the second candlestick, or you can go in this occasion that there are multiple candlesticks and say, I am a little bit worried with this stop loss, I will place it above the first candlestick responsible for the 3 candlesticks that created the fair value gap. Those are my 3 candlesticks, okay, so above the first one. And you can go ahead and hit a 2 to 1 RR very safely, and you see, even if you would go, let's say, for a 4 or a 5 to 1, this would be hit. Let's see here, you would hit a 3 to 1, and here you would hit a 3.5 to 1. So until here the 3 to 1 would have been the best reward to risk, but of course this would have been a losing trade if you would be using a 3 to 1. Let's go ahead and show even more examples now. I go back and back. This is another example, of course, right here. After this grab of liquidity, this is my highest fair value gap. This right here, my highest 15-minute fair value gap. Okay, so I break below, I create this fair value gap. If this gets broken, where do I want to be entering? Let's say somewhere at the top of these candlesticks, and the stop loss is gonna go either below this one. We will see which candlestick. 1, 2. Yeah, we can say that my stop loss, yeah, very nice, can be going below either this body right here or below this body right here. You can do it however you want. Okay, you can say below this body or below this body. It is up to you. This is what I meant. It is up to you. This is of course a way better stop loss, a way smaller stop loss, and you let this beauty play out. Let's see, a 2 to 1. Yes, a 2 to 1 is hit. Very nice. Here, the very same thing. Where are we in price action? We are tapping on this fair value gap right here, I think. Yes, we are. This is the double confirmation that I talked about. Now, what is here? The last fair value gap. You say, if this gets violated, I wanna be entering right here. And as price is forming, I'm checking out where I'm gonna place my stop loss. So 1, 2, 3. Okay, as this is evolving, you can say, okay, I will place my stop loss here. And I go for a 2 to 1. Okay, as this is evolving, you say this will be my stop loss, you calculate the stop loss, you can do it automatically with futures. If you haven't seen it, watch out the video that I made on how to connect TradingView. Okay, or if I haven't made the video yet, then go ahead and wait for it. It's gonna be uploaded this next week. Okay, so this would be another 2 or 3 to 1. We can do a 3 to 1 here. 3 to 1 I think we would have had over here as well. Let's see. Let's go back and check it out. No, we wouldn't. So you can do whatever you want, guys. 2 to 1, 3 to 1. Let's suppose that we went for a 2 to 1 on every single one of them, because you see 99% of the time this strategy is gonna work. This is fantastic. 2 to 1, 2 to 1, non-stop. Okay. Again, where? Right here. Right here. Even after a grab of liquidity, way more important. Look how much liquidity has been grabbed. Liquidity has been grabbed. This is my last fair value gap. If I am to violate it and enter somewhere, it will be, this is kind of like a breakout strategy, which is weird that I'm showing such strategy. So now as this forms, you can already have an idea. If the next candlestick is impulsive, I want to place my stop loss right above this candlestick. Let's see. Not yet. 1. Okay, the stop loss remains the same. There we go. And there you go. This is your win. Stop loss right above this candlestick as it is forming. You don't need to go for the highs. Another win right here. Here, of course, your FVGs are very high in order for you to do something like that. Also here, you would absolutely avoid something like that, because look, if your last FVG is here and you're playing the breakout, and the breakout would happen here, your stop loss, where would it be, guys? Even below this candlestick, it should be 82 pips. Compare it with these stop losses right here, so you would not be entering in this occasion. This would have been a trade. Of course, the time you see this happens on any single time of the day, so you see this even here, even right here, it happened. This is spectacular. Even after this grab of liquidity, with your last fair value gap being this fair value gap right here, and your point of breakout being this point right here, your order would go here, and you would say here you might be losing because you might say that they're going to place the stop loss where, let's say, above this high. I think this you would be losing, but this is the Asian session if I'm not mistaken. So let's see, yeah, this you would be losing with this stop loss, of course. This is a loss right here. Let's check out another example. This is a beautiful example, and this happens at a normal time, okay? New York time, 9:30 a.m. This is your last FVG. Price has grabbed liquidity above this area. Okay, this happened instantly. So as this happens, breakout trade here. Of course, this is again a huge stop loss. I don't know if I would be using this one. Let's see. This 50-50, I don't know. But this would have been a win with a sell stop. That's why I suggest that you place a sell stop right here. You can of course say that I wanna only trade the New York session or the London session, guys. You can do a bunch of things. So pretty much this is the strategy. Again, very simple strategy using kind of the violation of an inversion or the creation of an inversion FVG and an instant entry. You can call it like that. Go ahead and enroll in any of my exceptional services. Subscribe to this YouTube channel for more free educational content and to my other channel, the SMC Trader, because I'm gonna be uploading very nice backtesting on the other channel. If you wanna check out how I'm backtesting on a regular basis, those very same strategies that I'm showing you right here, and hopefully you remained until the end of the video because the cryptogram is ending exactly right now. And if you also got the last word correct, the first one who is gonna type down the code in the comment section is gonna get $10 absolutely for free, and this is something I'm gonna be doing every single Friday from now on in order to tell you thank you very much for the unlimited support that you have shown me. So this is gonna do it for today, traders, and thank you all for watching. Until next time.